Investors in the top electric car manufacturer, Tesla, are not unfamiliar with tales of the stock price collapsing rapidly. The company is enormously overvalued, as has been repeatedly stated. These, with the stock price steadily declining from its heyday, doubters have had a field day lately and appear to have been proven right. However, we think that this is only the tempest before the calm. Why has the price of Tesla's stock been declining? For what length of time will the stock price decline? When will stock prices begin to rise once more? To find out, keep watching. Following a number of unfavorable reports and the release of a potent electric pickup truck by Ford Motor Company in March 2021, shares of Tesla Incorporated reached an all-time low and fell for the fifth consecutive week. The stock dropped 1.5 to close the week at 588. The company had its worst weekly losing streak since March 2018, when investors withdrew from high-risk businesses due to growing concerns about inflation and how it might affect the U.S. economy, as well as some serious COVID-19 outbreaks in several nations. The fact that extraordinary circumstances are once again at play and influencing market sentiment suggests that history is repeating itself. The majority of growth stocks this year have seen similar difficulties as Tesla's stock, which has lost more than 18 of its value so far this year. As investors weigh the potential effects of the Federal Reserve's anticipated interest rate hikes, growth stocks like Tesla have experienced significant volatility. For assets whose valuations are primarily based on long-term cash flow forecasts, higher interest rates are typically viewed as less beneficial. Given its 176 price-to-earnings ratio, Tesla is unquestionably a growth stock. Even though a declining stock price typically portends problems in paradise, analysts say there's actually nothing to be concerned about. It seems that business is doing really well. It is important for investors to remember that Tesla has had rapid growth in recent years. Automakers faced a very challenging market, but fourth quarter deliveries rose 71% year over year. The management of Tesla predicts a 50% increase in vehicle deliveries this year, even in the event that its two new plants don't operate as planned. These explanations could support the high price of the stock. Why then does the stock price remain low? It varies according to who you ask. A price-to-earnings ratio of almost 300, Tesla's recent autopilot crash troubles, quality control problems, including seatbelt recalls and phantom braking, and the mysterious dissolution of the company's PR department are just a few of the many viewpoints that remain on this. Additionally, rival products are still being introduced into the US market, especially in Europe, where they outsell Tesla by a ratio of more than 3-1. Investors are posing some crucial queries and appear to be losing faith in CEO Elon Musk. Is Tesla expected to achieve its 3-year goals, and will it be able to beat rivals in the electric vehicle market going forward? It needs to boost its profitability in addition to competing with new rivals like Lucid and Rivian. This might be a more difficult task than succeeding in a recently discovered market that it previously controlled. The graph below shows that Volkswagen is currently outselling it in the European market. How much longer will the price of Tesla shares decline? It's crucial to remember that the real business operations and profit have very little to do with the causes of the falling stock. Although Musk's announcement of the Cybertruck's postponement and the introduction of fully autonomous driving technology did cause a dip in the stock price, the company is really doing very well. A larger sell-off in high-growth, high-multiple companies also contributed to the decline as investors braced themselves for tighter monetary policy and higher interest rates this year. We believe that these conditions are primarily caused by external forces and that Tesla's stock price will only begin to decline when these factors are resolved. What precisely are these variables? Among these are the well-known chip shortage, opposition, and doubt regarding the Berlin Gigafactory, anxiety over potential rate increases from the Federal Reserve, and the impact of the Russia-Ukraine conflict. Although it doesn't appear like the chip scarcity issue will go away anytime soon, Tesla appears to be in control of it. 2 Tesla employees and internal correspondents who were seen by CNBC claim that the company decided to remove one of the 2 electronic control units that are typically included in the steering racks of some made-in-China Model 3 and Model Y cars in order to meet sales targets despite widespread shortages of semiconductors. Tens of thousands of cars that are being transported to consumers in China, Australia, the United Kingdom, Germany, and other parts of Europe have already been impacted by the exclusion, which Tesla failed to notify. The absence implies that in light of the global chip shortage that affected From laptop computers to cars, Tesla may have needed to make adjustments beyond what it had previously reported in order to maintain operations at its facilities and sales starting in the last weeks of 2021. Additionally, it implies that a software update alone won't be sufficient for Tesla to turn every one of its current vehicles into self-driving vehicles. But if the business had followed this course of action, we think they would have a strategy in place to deal with any future problems that might arise. Now that the Berlin Gigafactory is operational, the stock price may rise in the future. The project is being built by Tesla, and it will contain a battery facility that can produce more than 50 gigawatt hours annually, a significant amount more than competitors in Europe can. Musk stated that by the end of the following year, he hopes to achieve volume production at the German battery plant, even if the batteries for the on-site cars would first come from China. The corporation anticipates investing up to 4 billion euros in the project, which will produce 500,000 battery-powered vehicles annually, according to media sources. But Morgan Stanley cautions investors in a statement that things could not go as smoothly as planned. The letter informed clients that Gigaballoon's story is about German jobs and growth, as well as Tesla's expansion. Great advancement is inevitably accompanied by some complexity. It will be interesting to watch how this turns out because the stock's growth depends greatly on its success. We think Tesla can successfully maneuver this to their advantage. Another thing that is making investors cautious is their fear of inflation. Inflation is spreading and quickening in the economy, according to Fed Chairman Jerome Powell, who told CNBC in an interview that more near rate hikes are required to control domestic price increases. Some investors are concerned about the Federal Reserve's projected interest rate hikes, but experts say there isn't much to be concerned about because stocks should, in theory, provide some inflation protection because a company's sales and earnings should grow with inflation after a period of adjustment. If anything, there are even more reasons to invest. And as more individuals realize this, more investments should follow. The final topic we will discuss today is the situation between Russia and Ukraine. Russia is one of the main oil suppliers, and the presidents of many other nations have sanctioned them, so this will undoubtedly affect exports. Fear of an impending global conflict has gripped investors. In actuality, though, things haven't been all that horrible, at least not for Tesla. A shift towards electrification and a rise in demand for electric vehicles will undoubtedly be caused by rising oil prices. Tesla and the stocks of other manufacturers of electric vehicles have surged, said A.com. Even though the national average price of gasoline in the U.S. is now $3.61, several experts suggest that consumers seize this chance to buy the dip because they believe there will soon be a recovery. We did, after all, discuss how the events and other factors that were taking place at the time caused the stock prices to plummet in March 2021, and Tesla's stock price reached its pinnacle later that year. The stock price of Tesla is expected to increase as the problems we've addressed are either fixed or go in the company's favor. Most significantly, because the quarter ends next month, Tesla's first quarter earnings call is quickly approaching. Analysts forecast outstanding results much better than the previous quarters, which will undoubtedly allay any doubts. Analysts predict that there is a 60% likelihood of a gain in the stock during the next month. We think that at this point, the stock price will level off and begin to rise once more. In summary, we give it roughly a month, and we anticipate faster growth in the upcoming months, consistent with the company's annual objectives. How much longer do you believe the stock price of Tesla will drop? What do you believe is driving down the price of the stock? Please leave a comment below.